Okay, so good evening, good afternoon for all of you. Let's get started now. The topic today that we are going to present is the difference between a fundamental trader and a news trader. It's absolutely two different worlds and looks like it is the same, but it's totally the opposite. So let me show you how this works, and I'm going to tell you the right tools that you can use when you trade the news. Because again, the fundamental traders, they go in one direction, and news traders, they go to a different direction. So for all those that, all the you that don't know me, my name is Karina Fabi from Watch My Trading. We trade Mondays to Fridays in the opening of Europe, in the opening of American market until the closing of Europe. So let me introduce you to, this is our website. Let me show you right here in case you're interested to take and assist into our live trading sessions. This is our site. Basically what we do in our expertise, it is to trade live with news. So that's the reason why we suggest this topic right now, in order for you to understand the difference between a fundamental trader and a news trader. And we consider ourselves a news trader. So that's the reason why many times when you try to trade information from the news, you will not have the same result that you're planning to. Yeah, we just reactivate our Twitter account in case you have Twitter, and here I update you when we start a new seminar, recordings of different seminars, and the market brief that we do every single day. After we trade the market, I upload a market brief that you can also find it on the YouTube channel. But here in the Twitter account, since we just reactivate this system, you can find all the updates that we have on our system. I will be in Spain within the next few weeks for a price action tour. So, all this news that are related to our activities and seminars and everything is in our Twitter account. We're also going to launch a magazine in September, and it's about the main core of our magazine, how to spot the investment fraud. So it's a huge issue in many countries, and now and this magazine will give you the insight on how the investment fraud works in different countries. There's also the different topics that we are going to talk in the magazine. Is the Bitcoin safe, or is it just about a bubble? We'll give you all the information that you need to know about Bitcoins, if it is a good investment or not. Then the buy and hold returns versus short-term investment returns, and how to invest in stocks versus derivative markets. So these are the main three issues that we notice many of you have when you start your investment career. Because of course we are in a historical moment where we have so many options in investment that we don't know where to go. So here we'll give you the right path that you need to know about the investing, how to properly invest your money. Either you have like a large amount of investment to do, or either you have a small amount to invest. There's many possibilities that you can use your investment wisely, as long as you know how to detect a fraud system and fraud investments companies, which are many. And we'll give you in the magazine and our experts how they work in different countries and how they operate in different countries, because they have different policies and different ways that they go after their clients. And many countries have different ways to do it. So it will be a good content in the magazine, but especially to alert you how to get out of those companies that they don't, they just spread flags in terms of investment. And we're talking about brokers firms, they're not brokers. We're talking about investment funds, they don't invest on anything. There's a Ponzi type of um, of a structure, and those type of things that you may be alert when you heard of that. So the magazine will have all of that. Okay, now let's go to our topic that I wanted you to basically give you a frame when you trade the news. So basically, when you trade the news, of course, we all know that the market gives the best opportunities when information is released. We all know that. The problem there is that you must be aware when you can trade or when you have to have a profile of fundamental trader and when you must have a profile of to trade just the impact of the news. So many of us, you go to the investing calendar, you have there the different basically categories of the information that's going to be published, right? Or you may go to a different calendar. Let's say that you use your calendar of the platform that you are trading with. So you have many ways to go and check what the news is going to be released. So the good news about this is that information is available for all of us, all traders, at the same time. And then we have and we know how to trade that in terms of the impact and the final impact, right? So basically we just make a relationship between the information that's going to be published and how this is going to impact the currency, the stock, or whatever you are trading with. Now the difference here, when you trade the news, specifically on the time that the news is being released, is that maybe, and just maybe, most of the time, the impact is absolutely the opposite. And you may know why. So the reason why is that the market already absorbed the information. I'm going to show you how and when that happens. Depending on the impact of the information and depending what information is going to be released, is that you might be careful on how to read the signs when the market already gave you the information absorbed, where if we can just basically say somehow. So we have two things here, and I'm going to show you what to take care of. So basically, first, you go to the calendar, right, because that's the only source that we have to know when the information is going to be released, right? So we have the calendar, and then, let me go ahead. Okay, now, so like I was saying, we got, this little detail right here, which is, the calendar that we all go to, right? We go to the calendar, and the different magazines or different business portals or even your broker may tell what information is going to be released. And they typically divided in three different levels: the high impact information, you got the medium impact information, and then you got the low impact information. What impact means that how the market is basically expecting or speculating about the information that's going to be released. You got high impact information, medium impact information, and low impact information. Now, the difference between the how or the categories that the calendars they may have of this different information, it goes related to speculation. It goes right, has a correlation with the effect or the impact that's going to be related to the product that you are trading. So that product may be currencies, right? That product may be commodities. Most commodities are impacted by information are gold or oil, right? Unless you trade other commodities, but you must know exactly what information to read and see about the commodities that you're trading. Currencies, commodities, and stocks. And stocks, you have a different calendar, of course, which is the profit of the company when that is published. And it's a different calendar. But we focus now in the calendar of the central banks or the labor departments or, those institutions that they publish information from the government and how it's going to impact in their direct economy. That's the calendar I'm talking about here. Basically, the news of countries. Okay, so depending on the news that we are waiting to trade, it's going to be the impact, right? So for example, if we trade inflation, right? Inflation, if we trade unemployment, and if we trade, let's give another example, trade balance, which is also very important for the market. Inflation, employment, trade balance, and we have another here, which is the interest rate, right? Interest rate. Okay, so we got inflation, unemployment, or unemployment rate, of course, and trade balance, interest rate. Okay, so all this information is the key of every country. So if you trade currencies, of course, you want to take care of inflation, interest rate, trade balance, and unemployment rate. So if you trade currencies, of course, there's going to be a direct impact in different commodities like gold and oil, depending on the currency that you are basically trading. For example, the dollar Canadian gets a direct impact of the price of oil. The Australian dollar has a direct impact of the price of gold. So these are the main G8 currencies that are impacted by commodities, gold and oil. Okay, now, so one more time, the news that are really worth it to trade in this market when you work with currencies are because you have many, dates that information is published, but not all of them are worth to trade. Not all of them, because not all of them have a direct impact with the market. Not all of them have a direct impact with the currency that we're basically trading. Okay, so news is huge and it's a big deal when you trade or you consider yourself a fundamental trader. All right, so that is the reason why our own calendar in our own website, we pick and we choose just the information that we would like to trade. You go here, you go to calendar. Our English version is under construction, so my apologies for that. But you can understand what's going to be saying here, of course, because the information here is basically in English. We put our news in English, even though it says calendario. All right, so here we go. This is information that we choose to trade because the speculation on this information is huge and the impact on the market is quite important as well. But I'm going to tell you now the difference between to trade the fundamentals of the information and to trade the news, the right impact, because it's absolutely different. So let's give an example. We made this calendar every Sunday at 2 p.m. Once we know how the market is, basically we're testing the market before we choose the information that we are going to be trading. So as you can see, you may have today, I don't know, maybe 4 news or 5 news or whatever news from Europe, from whatever market, but we only choose these ones. So for example, retail sales of Canada, this is really important. We have retail sales of the United States. We have oil inventories. We have durable goods orders. We have, on Friday, that's it. We not trade any news on Friday. So as you can see, you don't have all the news that most calendars give you. We just pick the ones that we consider and we know it's going to generate an impact. And you may ask yourself, an impact on what? First of all, that those news are going to generate an impact on the economy, okay? On the economy. So what that means is that the information that we trade with is going to affect the last result of the economy, the last information of the economy. And what is the last information of the economy? Once you have all the indicators lined up, the economy has basically two important decisions to make. And that will be direct affected on the interest rates. Interest rates, they could maintain, which we are now in a time of the economy where the interest rate has two ways to go. They keep it or they raise it. We are not in the time of the economy where they need to cut interest rates. They keep it or they raise it. So of course the economy has cycles, right? Now the cycle that we are in is that they keep the interest rate unchanged or they are going to keep it. Now the indicators before the economy or before the central bank or before the country knows what to do with the interest rates, it's measured before with all the information that it comes up during the month or during the 2 months. And that's going to direct impact on the interest rate of the economy. So that is why the traders follow the indicators. Fundamental traders, they follow the indicators. So here I mentioned fundamental traders. They follow the indicators, right? Because they are fundamental traders. They want to know how those indicators will impact finally in the economy. But if you are a news trader, you trade just the impact. You're a short-term trader. You just take advantage of the information that's going to be published, and then you go ahead and trade that exact impact. So here to here, there's a huge difference. And most people, they say, well, Karina, you're a fundamental trader because you trade with the news. I'm not. I don't care how the information is going to come up. And I don't care how the information will be affected, how the information, I'm sorry, is going to affect the economy. I'm not a fundamental trader. I trade the news because of the impact that it's going to generate. It's a huge difference. So you may wonder why so many times the information is positive for the currency and the value of the currency goes down, or why so many times the information for the currency is negative and the value of the currency rises up. It's exactly for what I'm saying now. Information is already discounted for the fundamental traders. So basically they already know how this is going to affect the economy long term in the next 3-4 months. But we're news traders, so we don't care how the fundamental traders get their position in the market because we take care of the impact before the information is published. So there's no correlation for us between if the information is going to be published is positive or negative for the economy or for the currency or the active that we are going to be trading. We are not aware of this. We don't really care. Of course, we know how the long-term fundamental traders will do with the information, if they're going to keep the entries or they're going to close it out. But we care just about the impact. And by impact, what I mean is this. So we come out to this conclusion. Fundamental traders, they care of the indicators of the economy for a long-term strategies or for long-term trading. Because, of course, if the market basically maintain the interest rate or they cut the interest rate or they rise up the interest rate, is going to generate an impact in the entire economy within the next, 3-4 months. It doesn't generate a right impact into the market when the information is released. So fundamental trades go one way. And then our way is to trade with the impact of the news. And as you may know, the impact of the news lasts 20 minutes. So 20 minutes we got to trade our news. We got to trade our, basically, when the information is published. That's all we got. After the first 20 minutes, that's all we got. So we basically trade the spikes, right? Spikes or pullbacks of the market. Spikes or pullbacks, right? That's all we do. So now we got 20 minutes to enjoy the impact of the news. But fundamental trader has nothing to do with the impact. For them, it's just maybe a drawdown. It's just maybe a, whatever short-term impact the information has with their strategies. But this impact will not affect the final decision or the final situation of the fundamental traders because they know, they already did the study. They already know how to measure the indicators. If they are wrong, they had to switch out and to change market areas with the entries, right? But fundamental traders and to trade the impact of the news not always is the same, and it's actually never the same. How many times you've seen that the information is positive, for example, for the dollar CAD, for the Canadian dollar, and then the impact of the dollar CAD is not exactly the way it's supposed to go. It's exactly the opposite, right? So again, for us, since we trade the impact of the news, and I could show you many examples of that in our channel, because here I record many times the exact moment when we trade the news. And let me show you that is in our YouTube channel. And you may see that we read the price before the information is released because the market already discounted how is going to be the impact. You know what I mean? So it is essential for you to understand that if you trade the news when the news is published, you are not a fundamental trader. You're just using this scenario of the information because you want to trade the impact, but not the final situation. So do not read, and here, let me show you, I got a few non-farm payrolls, I got a few, maybe some of them, they might be in Spanish, because we started with our trading doing Spanish and English since the last, I believe, a month or so. And here you may find some information that we trade the right and the moment, and you will see, like it says, the title of the news that we trade. And unemployment of Australia, for example. Unemployment of Australia, this is just 1 minute 36 seconds, so I can show you how we trade this. I believe this is only in Spanish, but I don't know if you can see here. Let me show you. I want to show you and translate in the time being. So this information, I record just 2 minutes before the information was released. And what I'm mentioning here is that we are going to trade sale. That's what I said, sale. And then, and this, I marked the price, 75.83. I said we're going to sell exactly at that level. We may put a sell stop right here, or some people may just sell at the moment with a stop loss and then with a sell stop right there. I'm mentioning here target 1 and target 2. That's when we're going to close the sale, but we don't put a take profit because we don't know how the impact is going to be, with the Australian, for the Australian economy. And this is an unemployment of Australia that we're trading here. So it's a huge information that of course is going to affect the economy within the next 2-3 months. So I'm saying this is target 1 and this is target 2 and maybe this is target 3, but we don't put a take profit because we don't know how important and how the market is going to speculate on this information. So I said, okay, we're going to sell from here, and these are the 2 possible targets. Let's see how it goes. I'm saying we don't program the take profit because we don't know down to where the market may go. And then I'm mentioning here, when are we going to take the buy scenario? As you can see, you have all sell prices. But then I said, well, just in case, for whatever reason, the market has not discounted the impact of the unemployment rate, we'll take care of the buy scenario. And then I said, we're just going to place a buy stop right here at the 75, 80, and 93. And from there, we are going to buy, basically. And that's what I'm mentioning in the rest of the video. So I'm saying we're going to put a buy stop at 75.96. Guys, I'm saying that the preference scenario, it is to sell, but we will cover also, and we will consider just a buy impact with a buy stop from here. So let's see how the impact goes. Okay. It's very fast. We'll consider both scenarios. I'm just moving the, so we go for the buy, target 1 and target 2. I'm saying that we keep the buy entry and target 2. Okay, so this is just an example how the market, it was for the sale price. Information, we don't know how information was, but I can check exactly the date and the time this information was released. But even it was more than employment for Australia, then for me, it was a positive information because the market was up. You know, the market was give value to Australian, because maybe the market already discount the information that was supposed to be negative from here. So if the market was in Australian dollar here down to here, this move that we saw here, those are the fundamental traders. Now the market, it react positive with the impact, because the people that were selling here, the traders, they took the entries, they moved back to the same entry price. They want to sell also from these levels again. So there's many scenarios that you may consider. The correlation of the information that is released is not exactly the same as the impact of the news. And I may show you many examples where people, when they consider themselves as fundamental traders, they don't know what's going on. You know, they're like absolutely not not trained to trade the impact, because you may say that, well, information goes this way, go that way. So after the first, or after the impact, after those 20 minutes, then you might say, okay, well, I'm going to trade now. I know the information is bad. I know the information is good for the economy, so I'm going to go ahead and sell or buy. But if you are a fundamental trader, you don't trade the impact. You trade the result. You trade the final result. So there's many impacts like you saw just now in the channel. Non-farm payrolls are the best. Non-farm payrolls are the best to trade with impact because I had the non-farm payrolls recorded since the last 2 years. So you may see it on the in the channel. Every non-farm payroll I record, every entrance that we do. So you may find it here. I mean, I trade the markets for the last 8 years, but we started this project of Watch My Tradings in the last 2 years. So you may find just, well, here, these are non-farm payrolls right here. That was in February this year. It was 20 minutes. Like we trade a little, we trade more than we're supposed to with the non-farm payrolls, but it's just a great information to trade with. Well, I don't want to take your time watching these videos, but as you can see in some of them, I mentioned that even if we see, yeah, this is my real account that I record all of this. This is many times the information that is released, you will not see exact impact. You will not see the exact impact. Okay, so, and that gives me the opportunity to mention that fundamental traders do not trade the impact. You trade the information afterwards. So you trade information after the first 20 minutes. After you know how it's going to really impact the economy. Those are fundamental traders. And news traders is what you just saw. We trade the impact. So we are a trader within the first 20 minutes of the news. Once you got your target 1, target 2, target 3, you're out of the market and that's it. Now, if you go and read how the information was, then you may say, well, now it is time to sell, now it is time to buy, because the economy might be affected within the next 2-3 months this way or this other way. So yeah, as you can see, that is exactly the difference between trading or to trade or be a fundamental trader or to be a news trader. There's a huge difference. And yeah, so no, it was like a different so like I was mentioning earlier, fundamental traders, again, one more time, you go for the result, you go for the final result. News trader, you go for the impact. Okay, you go for the impact. Now the impact, you may attack both sides of the market. You may go for the buy side and you may go for the sell side. Okay, you may go for the buyers or the sellers because you're trading the impact. And that trade for you, it should last up to 20 minutes. Up to 20 minutes, no more than that. If you're a fundamental trader, you don't trade the impact. You wait for the information to be released and then you go ahead and see, okay, well, how the information is going to impact the Australian economy, how the information is going to impact the Canada economy, how the information is going to impact US economy, and so on and so on. And depending on that, then you're going to have a strategy based on the fundamental information, because that's going to impact, again, all the indicators. If this is more unemployment, guess what's going to happen with the trade balance, with the consumer, with the retail sales, with the GDP, with the interest rate, and so on and so on. So those indicators are the first information that the economy and the traders need in order to know how it's going to be the final impact on the economy. How it's going to be the final impact on the economy. All right. So what do I suggest? Well, first you need to have some nerves to trade news, because you go for the impact, you enter and go. That's it. You go for that spike, you go for that pullback, and that's all you do. You enter and you're out. If you're a fundamental trader or you like to trade fundamental scenarios, then you go ahead and trade after the information is released, after the 20 minutes, and then you take care of a good analysis of the fundamental on how the information will impact the economy. So it's a huge difference. There's a huge difference, all right? So what side to take? Well, my side, it is the news, right? I trade the news. I don't want to have a trade that lasts too long in the market, because my capital, as you can see, my account is not that big. You know, my investment is not that important. So I'm an intraday trader. I take care of my entries very carefully, right? Because again, I trade based on the capital that I have. So I don't want to have long-term entries and with the risk that the market may have another or may turn around overnight or may just whatever information is released may change my scenario, my strategy, because fundamental traders have also that risk. You might say that because the GDP or because of interest rates or because of or whatever information is published, then you're just going to buy, you're going to sell. But it's not guaranteed that the market will do that, you know. So to me, that is some, if you're going to be a fundamental trader, if you're going to be a news trader, that's up to your capital, honestly. If you can afford drawdowns, if you can afford switches of market areas to buy area and to sell area, and then you can change your strategy fast enough, then go ahead and be a fundamental trader. But if your capital is not that important, and if you know, you have a, I don't know, $1,000 account or $2,000 account, then just you better take whatever you can from the market as fast as you can and get out of the market as fast as you can as well. So that makes the difference, or that's what I consider that you should analyze to be a fundamental trader or a news trader. And that's basically it. You go ahead and first see if you can manage the change of strategy. And in the last few weeks, and that's going to keep going on and on within the time, and that's going to happen like more intensified when this market gets increased and increased over time. Like fundamental traders, they switch into the impact, or they trade the news, because like I said, fundamental trading, it may not go along with the fundamentals, right? Fundamental traders, let me write that. Fundamental traders, they may not be on the right side, and if you trade the impact, then you are in the at least not having the risk with the information. So that's a huge difference. So every time I hear someone saying that I trade or I'm a fundamental trader, I said, well, not really. I'm not concerned how the information is going to impact the economy within the next month or so. I care of my entry that is in the good side, in the right side of the market or not. Okay, so that is a huge difference. And if you are aware of that, then you shouldn't have that mistake. And considering yourself a fundamental trader because you trade with the news scenario. You are a news trader if you trade with the news, or if you take the scenario of the news. There's a big difference. Typically, that's what happens. News not always go along with the impact, with the final impact on the economy. The economy goes one way, and if you trade the news, you take advantage of the first 20 minutes. That's all you do. If you are a fundamental trader goes with the final impact in the economy. So you don't care the 20 minutes. You care about the final information that's going to be how it's going to impact the economy. If they keep interest rate, if they raise interest rate, if they cut interest rate, how it's going to impact the economy within the next 2-3 months. Because the currency, the currency that you're trading with is going to be impacted, and it's going to have an impact within 2 or 3 months. So make sure that you are here or you're here. But whatever you do, you have to be aware that if you're here, it doesn't matter how the information will impact the economy in the long term. Now, if you are here, of course you care. And this is what you do. And you don't trade on the first 20 minutes the information is released. You trade 20 minutes or maybe half hour after, because you have to do some analysis. You got to study a little bit more how it's going to impact the economy within the next 2 or 3 months. Okay, so like I said, this is just all being recorded, and